Do you see the New York AG announced today they're suing them?
Yes.
Suing Mashinsky.
Yes.
Huh.
I mean, those are some really interesting articles that came out about Celsius in the last few days.
I've not followed. I mean, we've been here for 3 days making shows. I don't know what I've missed, but Mashinsky's an interesting one. I've had bad vibes from him for a long time.
Same.
I met him in Hong Kong at the Token 2049 conference. Interestingly, Justin was there.
Yeah.
With a whole entourage. Met him for the first time. Met a bunch of people for the first time there, but I met Mashinsky. Got these really bad vibes from him. And I've had them ever since. And I wasn't surprised when I found there was an issue with Celsius. I was surprised that so much other shit happened, but update me on Celsius then.
So all the client deposits, per the documents, don't belong to the clients. They belong to Celsius and the estate.
So whatever they have, because there's a gap between what they have and what their liabilities are, right?
That's right.
But
so it looks like all of client deposits will go to paying off liabilities first, potentially shareholders second, and depositors last.
Holy shit.
That's not good.
And help me understand, because this isn't like a UK thing. We don't have like the Bedford Attorney General suing Pete McCormack for lying to people about his football club, right? We don't have these kind of like state attorney generals. Is it a state or city attorney general?
Well, you've got attorney generals of the U.S., of the state, of different districts, of cities, but this one in particular is being tried in New York.
State or city?
I believe it was a state attorney general that came out to sue Mashinsky.
Actually, I don't even know what an attorney general is, to be honest.
It's essentially the lawyer that represents that particular jurisdiction.
Right.
You know.
And so they're suing Mashinsky directly.
Yes.
For what reason? Because they want to return as much net worth as he has to depositors on behalf of depositors, or because they want to put him in jail, or both?
I think it's a combination of both. It looked like, and I read the article very briefly. They're suing him for fraud.
Yeah.
Which means that they can go after his net worth, but they can also go after triple damages.
Right.
So they can take anything he's taken times 3. So they can essentially wipe him out and go to jail.
What I find really interesting about this last few months, what I can't wrap my brain around, is why people who are essentially successful, relatively wealthy compared to a lot of other people, have been so reckless that they've risked bankrupting themselves, risked destroying their reputation, risked destroying the lives of themselves and their family for what appears to be like pure greed. Because, I mean, I never liked Celsius, but I think they could have built a fairly solid business without being reckless. Similar to across, we've listed here, we've got a few here, 3AC, BlockFi. I mean, FTX is another one. If they'd have been responsible and not reckless, I feel like they could have built a big, successful business. I just don't understand what these people are fucking doing.
Well, I think there's 2 things going on here. Usually Ponzi schemes. Okay, let's just talk about those for a moment. Ponzi schemes don't start off as a Ponzi scheme. People don't say, "Oh, I'm going to go out and get people's money and then get the next guy's money and then give the first guy some of his money, and I'm just going to keep doing this until it falls apart." That's generally not what happens. Generally what happens is they're taking people's money in, they think they have a good idea, they start managing it, something goes wrong, and they don't want to upset their investors, or they don't want everybody to pull out. So they're like, well, I'm going to kind of make an exception this time, right? And they might do something like, somebody wants a redemption, and they might pay out a dividend just to kind of keep everybody happy and keep everybody in so that they can make it up, right? Like sometimes they have good intentions. I mean, I hate to call it good intentions, but like, well, I can make up this hole. But as you keep trying to make up that hole, the hole gets bigger and bigger and bigger and bigger. And it's a certain personality, obviously, that thinks that way, right? So that's usually how a Ponzi scheme evolves. They're like, well, if I can just keep it up a little bit longer, I can make up the hole. And that seems to be what had happened with FTX, right? It turned into a Ponzi scheme. I don't know. I mean, a lot of people say that, yeah, it was a fraud from the beginning. I don't know if that was the case. It could have been, but I truly believe that they had a hole that they kept trying to fill. And when you keep betting on black every time in the casino and you keep losing, eventually you think you're going to win, but you don't. Eventually you're just wiped out.
Yeah, I think something else went on with FTX in that I saw the org chart of all the companies they'd bought and the structure of this organization, and they seem to have made a lot of investments. I know myself, I look back at my career history, right? I built a very small advertising agency that got to 35 people, and that was challenging, really challenging. And eventually that company failed. We lost a big big advertiser, and we had to shrink it, and eventually it failed. That was hard. Mm-hmm. This is my first podcast. We've been through ups and downs. It's hard. And this is a team of 5 people. I don't know Sam's full career history or the career history of everyone who was alongside him, but to build a company that fast and by that many companies, I feel like something ran away from them and they just also didn't know what the fuck they were doing.
I mean, that's very well possible. And I don't know if you've ever been around the whole Silicon Valley group, right? I mean, they try to pump things up very quickly.
Yeah.
And there was probably a lot of pressure to say, okay, well, we just gave you money. You should raise another round, and we're going to bring in all of our friends, and we're going to, give you even more money at a higher valuation. And you've got to figure out ways to deploy that capital. And I'm not saying that that's what happened, but it seems to be pretty close to what happened, and then they just couldn't manage it. But going back to the second thing that happens, that I think happened in all these cases is a lot of people wanted to create a marketplace. Okay, Voyager, BlockFi, Celsius, FTX, they're all marketplaces. Marketplaces require 2 sides of the trade. There's people that are putting up their money to get returns, to get yield, and then people that borrow, and they have to pay a higher yield to borrow the money. Now, it wasn't a two-sided market. I mean, how many people out there do you know that was saying, "Oh yeah, I'm going to go borrow money from Celsius and pay 15%"?
Yeah, it's very rare. You got the odd person here or there who wants to borrow. Maybe they're buying a house, or I know it happens. I've tended to find the kind of people who borrow against the Bitcoin are the kind of people who got a shit ton of it.
Yeah.
Yeah, I got 1,000 Bitcoin, 500 Bitcoin, right? I'm going to borrow against 50. And maybe that time it's $1 million, $2 million. And it's a small amount of their Bitcoin net worth, but that $2 million allows them to buy a house, and they know their Bitcoin's still there, and they think the price is going $100,000. That's the trade that I think. I don't think there's many. I could be wrong. Never felt like there's many people who want to borrow $1,000.
That's right.
But there's a lot of people who want to lend $1,000.
That's right.
And get their interest. 0.1 Bitcoin, half a Bitcoin.
So if there's not another side of that market, what do? You go out and find degenerates who are willing to borrow at a certain rate, and you prop them up. I mean, if you look at, kind of go back to the list again, like Celsius or even Genesis, right? You got to find those people that are willing to take the loans. And who are the only 2 major counterparties that are willing to take the loans? Alameda, 3 Arrows Capital. They were willing to take size loans to do a trade that they thought was never going to fail.
I mean, look, we sat down last year, and you called the top. You called the top, and I ignored you. You called the top, man. You said, yeah, I think it was November last year.
Yeah.
Yeah, fine. I never foresaw this kind of year coming, where it was a combination of macro things happening that crushed the price because, it was you was telling me how correlated Bitcoin is. But then this kind of collapse in the borrowing and lending market, the 2 things hit it. Mm-hmm. And I'm not sure if that shortened the bull market, or I'm not sure if it deepened the bear market. I'm looking to you and saying, what's your crystal ball say?
Man, it's a tough one because, I made that call based on macro events.
Yeah.
Right. And that's what I'm better at. I didn't really expect, I'll take that back. I expected a couple of these lenders to fail. I expected potentially Celsius, potentially BlockFi. I didn't think that it was going to be as deep as like FTX and Voyager and all these other ones. But when all of those went down in the spring, it deepened it further than I thought it was going to deepen. And we're here for a while. I don't think that we're going to like 5,000 Bitcoin or 10,000 Bitcoin or maybe even 12. Maybe we'll go back down to 15. But we're probably going to be here for a while. And we're going to be here for a while for macro factors. And we're going to be here until the equity markets catch up with us. Equity markets are still behind the digital asset markets. We got here first because of those failures. And then we've had bigger failures with FTX, which again, I didn't predict. We could talk about FTX more, but I didn't predict that they were going to be a fraud. Thank God we didn't have any money with them.